Hello and welcome to a CMS Forex Daily Video Recap. I'm your fundamental market analyst, Nick Nassar. Today is Tuesday, September 14, 2010. Let's take a look at some European data to start, where we saw a disappointing result from Germany as investor confidence for the month of September dropped to minus 4.3 from 14 in August. This index, the ZEW Economic Sentiment, is used as a leading indicator as it measures the expectations of analysts and institutional investors when it comes to the German economy. It seems that these investors are very much in the camp that the strong surge in German growth in Q2 may be unsustainable. That's the fifth monthly decline we've seen in the index, and now it's at its lowest since February of 2009. Heading forward, budget cuts across the Euro region and slowing global growth has clouded the outlook for Europe's largest economy. In a second release from the Eurozone, we saw industrial production for the month of July was also weaker than forecasts. On the month, output was flat following a 0.2% decline in June. On the year, production grew by 7.1%, also softer than expectations. As we can see from the table to the right-hand side, it was durable consumer goods that led the decline. Taking a look now at the euro-dollar pair, we see that overnight we had moved higher to the 1.29 area, but in the wake of that German data, we fell back down, retracing 38.2% of the upward swing from our start to the week. But we found support there around 1.2830, and in the New York session, as we can see, we had a very strong move back in favor of the euro as risk appetite was bolstered by a better than expected US retail sales report. So that helped us to push through the 1.2920 level, which I had mentioned was our important resistance coming into this week, as it had acted as resistance in early September and also in mid-August. So this now opens up this pair for further gains. If we do a full retracement of the move that we had seen in August, the down move, we could see that we now come close to the 50% retracement area, 1.2960, and though we might see some pullback to retest that 1.2920 level as support, the 61.8% retracement of this full downswing is now the next target in the pair. Taking a look at that US data, we see that sales at US retailers rose in August for a second consecutive month, easing concerns that the US economy will stumble in the second half of the year. Sales were up 0.4% following a 0.3% gain in July, so that met expectations, but excluding autos from the equation, sales jumped 0.6%, almost double what economists had forecast. Demand rose as stores offered big discounts, luring shoppers for back-to-school shopping. If we exclude autos, gasoline, and building materials, which is the figure used to calculate GDP, sales advanced 0.6% after a 0.1% drop in the prior month. So definitely a positive report. If we take a look at one of our currencies that's tied to global growth outlooks and commodity prices, the Australian dollar, US dollar, we see that following a dip overnight in which we had that weaker Eurozone release and weaker European stocks, in the New York session we see that Aussie has rallied and has pushed above its resistance from in yesterday's session around 0.9360, and we actually move up to 0.9375, which is the high for this year in the pair. So we are testing our high for 2010. If I zoom this pair out to show a longer time frame, here we see that 2010 high, and we see the very strong rally in the Aussie that we've seen in the past 3 weeks, especially after we had the better than expected Australian GDP for the second quarter, and as US data has sort of come back from the brink that had a lot of people pessimistic and perhaps pricing in a double dip recession during the month of August. Instead, now we see the Australian dollar testing its highs for this year, and currently signs point to it breaking and continuing its rally. While the US retail sales data helped stocks and has helped some risk-on trades, as we see with the Australian dollar and the euro, the greenback gave up more ground to the yen in today's trading as the US dollar-Japanese yen pair breached a fresh 15-year low. Prime Minister Naoto Kan beat his rival Ichiro Ozawa in a party vote today, reducing the likelihood that the government will take steps to weaken the currency. So the weak data from Europe had helped Japan's currency advance in the European session, and we see that it has extended its gains now in New York trading. The positive retail sales data weakened yields on US government debt and treasuries, so we know that this pair is very sensitive to the spread between Japanese and US government yields, and so as US yields fall, we see this pair moving in favor of the yen. So big development, we're finally able to break this 83 level in the pair, the 83 sort of 83.30 to 50 level. We had been unable to move below in the past few weeks, and we see that now we are pushing below that level. Moving back to the theme of commodity and growth-linked currencies, we're looking at the US dollar, Canadian dollar, and as we can see that in New York session, we were able to push below our lows from yesterday's session at around 1.2560, and we hit the 1.02. Turning back to a commodity and growth-linked currency pair, the US dollar, Canadian dollar, here we see that the Canadian dollar managed to extend its gains against the US dollar. In today's session, we broke below our support at 1.0260, and we have actually breached the 1.0250 level in the morning of New York trading. So that was our low back on August 19th, and so if we manage to stay below this level, our next target would be around the 1.0150 level. So right now, with risk appetite being the theme this week, and with the big better than expected US retail sales report, we could see this pair try and target that level this week. Now, we did have some good data from Canada. In the second quarter, labor productivity fell 0.8%. Now, why is that better for the Canadian currency if productivity is down? And that's because firms will be more likely to hire new workers and increase wages and therefore inflation if they are unable to squeeze out further output from their current workforce. As we can see, the ratio of factories in use, or the capacity utilization rate, climbed to 76.0, a positive sign for the manufacturing sector. Also, we had new motor vehicle sales jump by 2.4% in July, a second straight month of strong demand. Shifting gears, let's take a look at the UK, where we saw August's consumer inflation reading come in higher than expected. The annual CPI rose to 3.1%, remaining above the 3% limit for a sixth straight month. The persistence of faster inflation may exacerbate the split on the Bank of England's Monetary Policy Committee, where Andrew Sentence has argued for an interest rate increase to tame prices, while other officials say more stimulus may be needed in order to help support the economy. Inflation in this report was pushed up by higher airfare and higher costs for food. So we could see that the core CPI was also at 2.8% annual rate, higher than expectations and higher than it was in the previous month. If we take a look at the pound dollar pair, we see that for the most part of today's trading, we continue to trade in a sideways consolidation pattern. The pound had been weakening up until it hit 1.5350 area, but then it had turned around following the CPI data. And then in the US trading, we see it also rallying on the back of risk appetite. Now I have this first resistance level at 1.5480, but we can see that we've moved above that. So the next level will be our highs from last week at 1.5535, which is a more standard resistance level for this channel. So we'll see if we can target that area. But we do have to be careful with this pair. It has been in very sideways trading during the past few weeks. So it really needs to push above some of these resistance levels before we can be bullish on the pound. Now, I also did want to talk about the Swiss franc a little bit. Here we're looking at the Euro-Swiss franc pair, and we can see that we broke a 4-session short-term upward sloping level of support, as well as our 200-period moving average at this 1.2980 area. So that is a bearish development for the pair, and we moved down to 1.2870. And as we can see, we don't have as big a boost from the U.S. retail sales in this pair as we've had in some of our other pairs. There are some reports that perhaps on Thursday, when the Swiss National Bank meets, that they may raise interest rates, so that should help to support the Swiss franc. Now, if we take a look at the US dollar Swiss franc pair, we see a very strong move in favor of the Swiss franc. First, we tested parity in the overnight trading session, and now in New York trading, we've broken below that, and we see that the pair has moved down to 0.9950. So this is the first time that this pair has moved below parity since December. We can see that earlier overnight we broke our support at 1.0050, so that sort of opened up this 100 pip move in the pair. So we'll see if there is more to the rumors about the SNB deciding to raise rates, which is quite interesting because that would cause an appreciation of the Swiss franc, and that's something that the Swiss National Bank doesn't actually want to see happen because it'll hurt Swiss exporters. So that's our market highlights and our fundamental news for today. The upcoming docket will feature Australian data on consumer sentiment, vehicle sales, and housing starts, while overnight we get employment data from the UK and the Eurozone, inflation data from the Eurozone, and the inflation report hearings in the UK at 6:30 a.m. Tomorrow, the US will post data on Tomorrow, the U.S. posts data on manufacturing, including its Empire Manufacturing Index and industrial production, as well as import prices, while Canada posts a measure of manufacturing sales at 5 p.m., so tomorrow afternoon. We do have the Reserve Bank of New Zealand deciding on interest rates, though they are expected to hold at 3%. And that will wrap up today's daily video recap. For more news, videos, and analysis, please visit our site cmsfx.com. I want to thank you for watching and wish you good trading.